This is the AHA Market Minute. I'm Ryan Kazmierski, your editor of American Hard Assets, and today we're joined by Doug Jackson of Elemetal Capital. Doug, we topped the 1,400 point finally today. Let's look forward a little bit. Where are the information points in stops coming from in the next couple months that will dictate whether we're back in a bull market or we're going to?
Yeah, Ryan, I think the key word in the market is tapering. It's a headline that has been passed around since the meeting in Jackson Hole. It's something that people are looking at as far as to get ahead of the trade. You had some comments out of the meeting in Jackson Hole last week, I should say, saying that quantitative easing didn't quite work and that there was still more to do. Then you've got the background story of, well, we need to start tapering, there's that word again, interest rates because the U.S. economy is recovering. I think it's a bigger issue than that because it's not just U.S.-centric. We've got a variety of factors. You still got the periphery in the Eurozone that is not out of the woods yet. You have good German economic data. That's continued to be the case as they've kind of been the leader over there. You've seen the euro move 1.3% in the past month. That's a pretty strong move against the U.S. dollar for a backdrop that is supposedly recovering as well. I think there's more pain to come there. Any dollar strength I see is going to pull down metals. You also got a slowing Chinese economy in the periphery around there, and not so much a direct effect like Portugal, Italy, Spain would be in the euro, but you've got outlying countries like Australia slowing down because of the effects of China. So I think you've got some stuff to kind of drudge through, for lack of a better word. With that on the horizon, I do understand why we've moved up with comments saying, quantitative easing hasn't worked. You've got news out of Syria that always is going to contribute to a higher metals movement. It will be very interesting to see whether the Fed can start tapering quantitative easing in the U.S. and not have a detrimental effect on the worldwide economy. That dynamic is going to speak very loudly for metals. My personal opinion is that metals are continuing to move higher because I don't think they are ready to pull the reins on quantitative easing just yet.
All right, well, I appreciate your time, Doug, and I look forward to talking to you again in a couple weeks.
Thanks, Ryan. Appreciate it.
Today's Market Minute from American Hard Assets.